Welcome to The Explainer. Today, we're going to break down exactly how you can start building some serious wealth with just $50 a month. And nope, that is not a typo. By the time we're done here, you'll have the complete roadmap.
So, let's just start by tearing down the biggest myth out there, that idea that you need to be rich to start investing. Let me just tell you, that is completely 100% false. Not anymore.
In fact, check this out. If you invest just $50 every single month for 30 years, and we assume a 10% average annual return, which, by the way, is right around the historical average for the US stock market, it could grow into over $113,000. This is the power of starting small, but more importantly, starting right now. Okay, let's dive into this. How on earth is a number like that even possible? Well, it all comes down to one of the most powerful forces in the universe, compound interest. It's your money making money, and then that money turning around and making even more money.
And what's so wild about this chart is that the growth isn't a straight line. I mean, look at the early years. It feels kind of slow, right? But then something incredible happens. As your money starts earning its own returns, that growth curve just gets steeper and steeper. It literally snowballs over time.
And this right here perfectly illustrates the real secret weapon: time. Just notice how it took 10 years to get to that first 10 grand, but then only another 10 years to tack on almost 30,000 more. That last decade is where the real magic kicks in. You see, consistency over a long period of time is way more powerful than starting with a huge chunk of cash.
So where does this $50 even come from? Well, the amazing thing is, for a lot of us, it's probably already hiding in our budget. I mean, studies show the average person spends anywhere from $17 to $50 a month on subscriptions they completely forgot about. Finding that money is often as easy as just taking a quick look at your bank statement.
Now, before we jump in and open an account, we have to do a really quick but absolutely essential safety check. This is the part that protects you from having to sell your investments at the worst possible time. All right, here are the 3 non-negotiables. First, make sure you have a small emergency fund, at least $500 to $1,000. Second, you have to aggressively pay down any high-interest debt like credit cards. And third, do not invest any money that you know for a fact you're going to need in the next year. This simple checklist, this is your financial foundation.
Okay, with that safety check out of the way, you're officially ready. So where do you actually put your money? Let's look at the best accounts for someone just starting out.
So, you've got a few options, but for most people starting out, the Roth IRA is the undisputed champion. And as you can see right here, the reason comes down to one simple word: taxes. With a Roth IRA, your money grows completely tax-free. That means when you withdraw it in retirement, it's all yours, 100% tax-free. Seriously, it's one of the best gifts you can give your future self. And the great news is that opening an account is easier than it's ever been. Big, trusted platforms like Fidelity, Schwab, and Vanguard have totally removed all the barriers. You can literally open an account right from your phone with $0 and no account fees. Okay, the account is open, the money is in. So now for the million-dollar question, or well, in our case, the $50 question, what do you actually buy? The smartest move for any beginner is not trying to find the next big stock. It's much simpler. You just buy the entire market. And you can do this with something called an index fund. Think of it as a single investment that holds tiny little pieces of hundreds, sometimes thousands of companies, giving you instant diversification. The most important thing here is to keep it simple. Your goal is to pick just one of these funds to start. An S&P 500 fund means you own a little piece of the 500 biggest U.S. companies. A total market fund is even broader. And a target date fund, that's the ultimate set-it-and-forget-it choice. It just automatically gets more conservative as you get older. Honestly, you cannot go wrong starting with any of these 3.
And hey, don't worry if you look up a fund and see that one share costs hundreds of dollars. There's this fantastic feature called fractional shares, which just means you can invest by dollar amount. You can buy just $50 worth of any stock or fund, even if a full share costs way more. Your $50 just buys you a small slice. All right, now we're at the final, and you could argue the most important step of all, putting this whole thing on autopilot to basically guarantee your success.
The single best thing you can do for your long-term returns is to take your own worst enemy, your emotional brain, completely out of the equation, and automation is how you do it.
See, when you set up an automatic $50 investment every month, you're using a really powerful strategy called dollar cost averaging.
It just means your $50 automatically buys more shares when prices are low and fewer shares when they're high. It's this brilliant way to smooth out all the market's bumps without even thinking about it.
By automating your investment, you build a system that just helps you avoid all these classic mistakes. You won't be checking it constantly. You won't be tempted to sell when things get a little scary. And most importantly, you won't be sitting on the sidelines waiting for some perfect time that, let's be honest, never actually comes.
And if you need a little extra motivation to stick with it, just look at this, $226,000. That's what happens if, over time, you can find a way to bump that automated investment up to just $100 a month. The power of these small, consistent actions is it's incredible.
It really is that simple. The hardest part is just starting. It's a small step you take today that your future self is going to be so incredibly thankful for. And that's our roadmap for turning $50 a month into a real nest egg. The path is clear, the tools are free, the process is simple. So now the only question left is, what amount will you decide to start with?